Welcome to this special breaking news explainer. Today, we are looking at a massive, seismic shift in the valuation of big tech, a shift that is completely redefining how the market views the race for artificial intelligence. We're going to break down exactly what just happened, how a perceived AI laggard suddenly leaped to the very front of the pack, and what all of this means for the broader tech ecosystem moving forward. I'll be your anchor today as we roll up our sleeves and process some truly massive headlines from the bull market news desk. Because Friday delivered an absolute reshuffling of the tech heavyweights. The big story? Apple has officially dethroned Nvidia as the world's most valuable company. Section 1. Breaking news: Apple unseats Nvidia. For nearly a year, Nvidia was sitting pretty at the absolute top of the market, riding this unprecedented wave of AI demand. But on Friday, Apple hit a staggering valuation of $4.88 trillion. What's super fascinating here isn't just the sheer size of that number, it's exactly how they got there. Apple's shares held completely steady to hit this mark, allowing them to reclaim this coveted top spot for the first time since April of last year. You know, sometimes holding steady while the market reassesses your long-term value is enough to win the race. Meanwhile, Nvidia dipped about 3.5%, landing right behind at roughly $4.86 trillion. So by a margin that is practically a rounding error in the multi-trillion-dollar club, the crown has officially been passed. But the numbers alone don't tell the whole story. The real question we need to answer is why investor sentiment has shifted so dramatically back toward Apple. Okay, let's dive into this with Section 2, Apple's AI strategy shift. This is where the narrative really flips. For a long time, people saw Apple as lagging behind in the AI race because they weren't spending massive amounts of cash on foundational models. But Tawny Meadows over at Brickley Wealth Management hit the nail on the head. He points out that Apple is way less exposed to CapEx intensity, meaning they aren't burning through unbelievable amounts of capital to build AI infrastructure from scratch. Instead, investors are betting on Apple's earnings durability. They love the reliable monetization through their services arm, that incredible ecosystem lock-in, and the constant cycle of hardware upgrades over pure speculative upside. And a huge piece of this strategy centers on that iPhone you probably have in your pocket right now. Last month, Apple finally rolled out its long-delayed overhaul of Siri. They are betting heavily that this upgraded assistant will close the gap with both big tech rivals and those fast-moving new-age startups. Analysts are pointing out that Apple is essentially sitting on an AI goldmine, the personal data that lives on every single iPhone. This data could make Siri's answers infinitely more capable. But it's a super delicate balancing act. Apple built its entire reputation on privacy, right? Keeping that data locked down. Their ultimate challenge now is finding a way to safely unlock the value of that data to fuel their AI without compromising the privacy their users absolutely demand. Timing really is everything here, and this timeline puts this monumental shift into perspective. Back in October, Nvidia became the first company in the world to surpass a $5 trillion market valuation, rocketing into a rarefied territory that seemed totally out of reach for its rivals. Then, this past Friday, Apple executes its comeback and reclaims the top spot. But look at what is coming up in September. Apple CEO Tim Cook is preparing to hand over his role to hardware veteran John Ternus. This incredibly successful push to solidify Apple as a leading AI player is absolutely going to shape how Tim Cook's final months at the helm and his overall legacy are viewed by history. Now, what's really interesting is Section 3, Nvidia, still an AI juggernaut. And this brilliantly illustrates the divide. Just because Apple took the top spot doesn't mean Nvidia is suddenly struggling. Far from it. The current market highlights the two very different paths these companies are taking in the AI revolution. On one side, we have Apple playing the consumer game, monetizing through services and hardware lock-in. On the flip side, we have Nvidia providing the fundamental building blocks. Nvidia's graphics processors are the literal engines powering much of the generative AI frenzy we are seeing globally. They build the infrastructure, while Apple builds the consumer application layer. This sentiment is echoed perfectly by Benjamin Hall, Vice President of Alpha Research at Segal Marco Advisors. When asked about the shift in market cap, he simply states, "I don't see any meaningful distinction." He reinforces that Nvidia is going to be a significant participant in whatever happens going forward. The underlying message here is pretty clear. If market sentiment shifts back toward infrastructure and hardware, Nvidia could very easily snatch that top spot right back tomorrow. But hey, we've got to add a crucial caveat here. Apple isn't completely invincible in this new position. They're actually navigating a pretty delicate situation of their own.
To offset their own rising costs, Apple has implemented a strategy of raising prices on their products. While this definitely helps protect their margins in the short term, it introduces a massive risk. Pushing prices too high could actively hurt consumer demand, especially in a challenging global economy. So, their top position? It's anything but guaranteed.
Let's move on and see how this builds in Section 4, the expanding AI market. Because guess what? It's not just a two-horse race between Apple and Nvidia anymore. The AI wave has dramatically spread out, and the real breakout stars this year have actually been the memory chip makers. Micron, for example, crossed the $1 trillion mark in market value back in May. Why? Because investors realize that high-performance memory chips are just as crucial for AI infrastructure as the processing chips themselves. We're also seeing new global players enter the mainstream US market to capture this exploding demand, like South Korea's SK Hynix, which just listed on the Nasdaq earlier this month. Going back to Benjamin Hall, he points out that these new entrants are totally changing the market dynamic. By introducing more publicly traded options, they are spreading the focus away from just the pure Magnificent Seven tech giants, funneling capital into a much wider array of companies. The AI trade is diversifying, and it's maturing right before our eyes. But it's time for a quick reality check, because this hasn't been a straight rocket ride to the moon. This eye-watering rally in semiconductor chips ran into some serious turbulence back in July. Investors suddenly took a step back and began questioning the true sustainability of the artificial intelligence trade. This sudden wave of skepticism knocked the Philadelphia SE Semiconductor Index down by almost 19% from its all-time highs. It was a really sharp reminder that extreme growth often comes with extreme volatility. Context is absolutely crucial here, though. Despite that massive 19% fall in July, the broader semiconductor index has actually performed better than Nvidia so far this year. Think about that for a second. The collective performance of the wider chip industry has actually outpaced the single company that has been the undisputed poster child for the AI boom. It proves that the foundation of the AI revolution is much broader and perhaps much stronger than just one single processor company. So that brings us to the big question for this explainer. We've seen Apple reclaim the throne by promising to securely monetize our personal data. We've seen Nvidia solidify its role as the undisputed infrastructure king. And we've watched entirely new sectors of the semiconductor market explode in value, even amidst sudden market drops. So looking at your own portfolio, you have to ask yourself, is the AI trade truly sustainable in its current form? Or was this week's big tech shuffle just the very beginning of a much more massive market realignment? Thank you so much for joining me at the news desk to unpack these incredible shifts. Keep watching the data and keep asking the big questions.